Hello, and welcome back to our monthly market update. I'm Tim Chubb, the Chief Investment Officer at Girard, a Univest Wealth Division. Today, we're going to jump into the market moves within the last few weeks after the election and the positive vaccine news, and what investors will be looking for as we turn the calendar into the new year. Investors are really faced with two cross currents right now, grappling with the optimism that 2021 will bring as the economy normalizes, and we have a wealth of good news on the healthcare front with multiple successful vaccines that may be delivered by the end of 2020. And on the other hand, dealing with the consequences of zero stimulus still that has been passed from Congress, a Senate runoff that presents uncertainty and potentially a different outcome of what the markets have been pricing in recently, and also exploding COVID-19 cases across the country. A split Congress provides certainty of really what the markets are looking for. Since July, markets have really been pricing in a blue wave to take place across the United States, a Senate and a House that were both Democrat and would have likely resulted in substantial stimulus that would have impacted the market in a positive way as Congress tries to get the economy to the point where we're able to get back on our feet once a vaccine is delivered. On the other hand, a split Congress where Republicans maintain their Senate control will ultimately likely offer a little bit of a smaller stimulus package, but will avoid some of the issues that investors have been concerned about, particularly in healthcare, where pricing pressure as well as reform to the Affordable Care Act were very likely. We also expect to see less banking regulation under a split Congress and other aspects that would ultimately deliver a better opportunity for corporate earnings to rebound in 2021 and beyond. Ultimately, this gridlock could be changed as the Senate runoff in January is still up for debate. And we'll find out more on January 5th once Georgians go back to the poll for the two Senate races, which are in the runoff. Ultimately, I think we could see some volatility as we come to a close at the end of this year, and it will be especially important to watch some of those sectors that rallied extremely hard after the election, as the markets were trying to price in the split Congress and a bit of gridlock within Congress in the next couple of years. Moving on to COVID-19 and the economy, the fundamental backdrop heading into next year as we continue to normalize remains extremely supportive. Monetary policy, as Jerome Powell and the FOMC have committed time and time again over the last couple of months, will remain extremely accommodative and supportive for the financial markets and the economy. But ultimately, fiscal support is absolutely necessary to make sure that the labor market continues on the trajectory that it's been on for the last several months, and we don't experience the fear that many of the markets and investors and Americans were worried about through much of March and April of last year, where many businesses were to close had it not been for PPP. We've really seen a divergence between secular growth and cyclical growth this year. And it's a really important concept because the market has really been moving as opposed to the normal tendencies where companies like technology or healthcare, consumer discretionary, had been really performing well for quite a few years, and some of the more value or cyclically oriented sectors like industrials had lagged. Recently, and over the course of 2020, a lot of the secular growth companies have done extremely well as the benefit of massive disruption and the huge tailwinds that their industries provide them ultimately expanded demand for their products and services and led to really a place of safety, I think, for investors for the bulk of the year when so many other companies were really in survival mode. Recently, coming out of the election, really we've seen cyclical growth names start to perform well. Businesses that are more susceptible to the ebb and flow, the peaks and troughs, and the fluctuation of the economic cycle. As the labor market improves and consumer spending picks up, you would expect to see a lot of these consumer cyclical stocks, a lot of industrial names, especially as companies need to rebuild their inventories after the recession that we saw earlier this year. And the best way to really illustrate that is to look at how the market responded after Election Day, but even more importantly, the Monday that a lot of the great vaccine news was announced, where we saw a 6.4% return in the value, or again, a lot of these more cyclical companies, which was the most extreme one-day gain that we've seen since at least the mid-'80s, which is about a 10 standard deviation event. And just to put that in perspective, and not to make this into a statistics class, a 10 standard deviation event is an event that we would only likely see 2 times during the next 1,000 years. And we saw the NASDAQ composite, which is chock full of a lot of the secular growth names in technology and healthcare, have a historic one-day loss of down 13.7%, which was a 15 standard deviation news event the Monday of all the great vaccine news. And so violent rotations have taken place under the surface of the market as it continues to hit all-time highs, and it really underscores the importance of having diversification within your portfolio, given the expectation that real GDP in 2021 is expected to rebound and actually grow to the tune of about 4 to 6%. And given the strong vaccine news that we've seen in recent days and weeks, with many Americans expecting to start seeing the vaccine, or a lot of our frontline responders and elderly, as soon as the end of the year, I think it is quite possible that we could see GDP growth reach the 6% target on the higher end of that range. Thank you for joining us today. As always, for more market insights, please visit us at meetgirard.com, and we wish you and your loved ones a happy holiday season.